Assalamualaikum and greeting to everyone. My name is Nur Syafiqah binti Muhammad Razali. Today, my group will present about Malaysian Government Security are known as MGS. So first of all, I would like to introduce my group member, which is Fatihah, Nur Atika Auni, Nur Najiha, Wan Umi Kasum and Putri Amira.
Of all, what is MGS? MGS or Malaysia Government Securities are fixed rate coupon bearing bond issued by Bank Negara Malaysia through competitive bidding. They ensure a principal payback at maturity with semi-annual coupon payment. Crucial for government financing, MGS fund national development project. Investors, including individual and institution, can invest in MGS, while local corporations utilize bonds, notes, and paper for funding. Overall, MGS offer a valuable investment avenue and support government and corporate financial needs. Now I will talk about the market player for MGS. The Malaysian Government Security involves two market players, which are non-resident investor and the Malaysia Government Investment Issue (MGII). For non-resident investor is including International Central Bank, government and asset manager in charge market liquidity. Their participation on Bursa Saham Malaysia ensure effectiveness. These investors create a dynamic and stable financial ecosystem, promoting a robust bond market in Malaysia. Other than that, Malaysia Government Investment Issue (MGII) also a market player of Malaysian Government Security (MGS), closely following Syariah guideline through the Murabahah principle. This Islamic Government Security issue certificate of indebtedness via different markup transaction, often involving commodities like crude palm oil. MGS' unique approach ensures transparency and ethical practice by linking sukuk to tangible valuable asset. The Murabahah contract outline clear obligation for both the sukuk issuer and investor, contributing to the diversification of the Malaysia government security market. MGII underscore Malaysia government commitment to providing a concise, Sharia-compliant and ethically sound investment avenue.
Next, I will explain the reason behind MGS securities issuance. First of all, BNM issues MGS to satisfy the investment needs of the employees' provident fund, local bank and the insurance business. Next, to manage all the national debt. The government will issue a new security to replace the old one to ensure a smooth repayment schedules and control the debt maturity structure. Other than that, to manage the interest rate. This is because interest rates in the larger financial market are measured against government assets. Lastly, to increase the securities in foreign exchange management. By using foreign exchange management strategies, securities value in foreign currencies can be increased. So, global capital market can be accessed and currency exposure can be avoided.
So, I will continue for the next slide. I really sure you guys want to know the benefit of invest in MGS. The first benefit if you invest on MGS is low risk. This is because MGS are issued by Bank Negara Malaysia and it is more secure than other investment. Next, it also can help for national development. This is because the main reason why MGS is established because government need to get fund to develop national project. If many people are invest in MGS, it also can increase the country economy and can compete with other country. The third benefit of invest in MGS is it can give regular earning to bondholder. This is because government bond must pay interest every 6 months and allow bondholder to receive regular income. The last benefit is MGS allow investor to invest in other investment even though they are already invest in MGS.
Next, I will explain on the characteristics of Malaysian government security. First, it is under government support. Malaysian Government Security or MGS are directly issued by the Malaysian government. The Malaysian government guarantees the securities it issues, giving investors a sense of confidence. It means that this support from the government is critical for keeping investor confidence. The second one is government debt management. The issuance and administration of MGS are critical components of the government's overall debt management plan. The government seeks to find a compromise between achieving its funding needs and lowering the cost of debt. And effective debt management helps to stabilize the government's fiscal position. The third one is risk-free. MGS are risk-free marketable debt instruments that are issued by the Malaysian government and auctioned off by Bank Negara Malaysia. And the fourth is lower return. MGS are considered as low risk, which means it may provide lower returns than riskier assets. Next, Malaysian government security also has various securities. MGS has a variety of financial products with different maturities and qualities. It has various types of financial instruments that can be bought or sold. They also provide different risk returns and various strategies of investment. It can include government bonds and treasury bills. Then, nominal value. The nominal value is the whole principal amount agreed upon by the bond issuer to repay the bondholder or investor when the bond matures. Next, it also has coupon payments. Coupon payment is the annual interest rate paid on a bond from the date of issue until maturity, represented as a percentage of the face value. MGS are fixed rate, coupon-bearing bonds with a principal payback guarantee at maturity. And the last one is coupon rate. It is the nominal interest rate paid by the issuer to bondholder. Instead of a dividend, bondholder will receive a coupon as a return. It could be paid on a monthly, quarterly, semi-annually, or annual basis. Most bonds, on the other hand, pay semi-annually, which is every 6 months.
MGS is medium to long-term periods of up to 30 years. This is a capital market asset of coupon-bearing fixed rates bonds with one-time repayment of principal at maturity. These coupon payments are made twice a year. The estimate years MGS will mature are July 2026, April 2028, and also April 2030. The BNM will constantly issue a benchmark security with a maturities of 3, 7, and 10 years above to construct a benchmark curve. 15-year and 20-year bonds have been issued to prolong the yield curve.
In conclusion, Malaysian government security are fixed rate, coupon-bearing bond with guaranteed principal return at maturity, issued on behalf of the government by Bank Negara Malaysia (BNM) to raise funding for national development initiatives. It has two main market players for MGS, which are non-resident investor and Malaysia government investment issue. MGS are issued for a variety of purposes, including meeting investment needs, managing national debt, implementing monetary policy, controlling interest rate, and managing foreign exchange. These assets provide various advantages such as low-risk investment, liquidity, and support for national growth. Malaysia government security features include government funding, a risk-free character, lower return compared to risky asset, a variety of security which vary in maturity, a nominal value, coupon payment, and a coupon rate. MGS mature period normally 3 to 30 years. In the end, Malaysia government security MGS, given their multiple benefit and attribute, each made an important contribution to the country's economic development and financial stability.
Next, we will tell about how MGS works. First step is investor will subscribe MGI via bank that offer MGI.
Next, BNM will act on behalf of investor and will purchase the Sharia compliance commodity brokers at a cost price.
After that, commodity will sell to GOM at the market price on a different basis.
The GOM issues MGII to investors as evidence of the indebtedness from the deferred payment.
BNM, on behalf of the GOM, immediately sell the commodity purchased by the GOM to a commodity, and broker will make an immediate payment of proceeds at a cost price.
At last, Government of Malaysia made scheduled payments to investors like predict profit payments throughout the tenure of the long-term non-interest bearing government, security based on Islamic principle repayment, and final profit payment at maturity of the sukuk. What are you guys waiting for? Let's come and start to invest in Malaysia government security.